learning the proper way to invest in the stock market. Learning the proper way to invest in the stock market. Ranganath, +1. Srinivas, Sushmita, Shilpa, Jyoti, Satvik, Shivam, Vaibhav, Sunanda, Vijay, SP. Great, great. SP बोले तो सुप्रीम ऑफ पुलिस तो नहीं है ना? Divya, Bhavika, yeah, great. So how many of you have already heard me, and how many of you are seeing me for the first time? Because as Samina said, we conduct this session once in every month. So this is not the first time that I'm taking the session. So I take session once in every month on some or the other related aspects to finance. Okay. So guys who are seeing me for the first time, let me just formally introduce myself, a bit about me. So I'm basically a commerce graduate, a law graduate. Actually, I started my career as an advocate. I'm a fellow company secretary. FCS means fellow company secretary. I've done my executive program in finance from IIM Kozhikode. I started my career as an advocate in 2004 in AP High Court. I practiced for about a couple of years. Then I completed my CS. I joined Surana Group and CK Bella Group as a company secretary. And during my stint with Surana and CK Bella Group, I handled a lot of projects and all. And finally, after doing my executive program in finance from IIM Kozhikode, I joined a multinational company, Horman Group, as a CFO. Finally, 2018, I joined my current company, that is Welltree Group, as a joint promoter and managing director. I'm personally a SEBI registered research analyst. I'm an equity registered research analyst with SEBI, and I'm a registered mutual fund advisor, and I'm also an insurance planner. I've trained several MBA students, graduates, a lot of corporate employees into financial planning, insurance, mutual fund, and stock markets. In fact, I do keep running a lot of both free and paid programs. So I've been into training for the last 3 years. So let's set the agenda. So what are we going to talk today? The first thing is, I would start with understanding what are your beliefs about the stock market. Then we will explore what is the proper way to invest, how to start your own investment journey. How can you start your own investment journey? Understanding the current scenario, the COVID scenario, where economy is going down, stock market is going up. So what you should do in the current scenario. And finally, defining a strategy to invest into the current market. So are you all in game for this? Is the what I would do is I would actually put everyone on mute and not allow anyone to talk during this, so that it is not disturbing. Okay, so I have muted you, every one of you, so that you cannot, we don't get disturbed in between by mistake. No one disturbs intentionally. So the only way of communication between us going to be through with the chat window. So if anything is not very clear, you want me to repeat, you have any doubt, anything to say, kindly freely use the chat window. I will have an eye constantly on the chat window. Okay, yeah. So it's a small disclaimer, because I'm a SEBI registered research analyst. So it's a mandatory disclosure which I need to give, that this presentation is only for an educational purpose and nothing to be considered as an investment advice. Any reference to any of the companies, any stock, if you ask me anything, it has to be taken only as a personal opinion, and please invest only after thoroughly taking a discussion with your financial advisor. So let's understand that, okay, when we speak about investing into stock market, why the hell should I invest into stock market? Okay. And before we speak about investing, what actually is the difference between saving and investing? Because what we tend to do is we basically mix up both saving and investing same. Okay, so what actually saving is trying to save your money. As the word itself says, you are saving the value of money. So my money was 100 rupees. There is an inflation. So due to inflation, if I keep that 100 as 100, my value of money is getting eroded. So to save the value of money, what I do, I put this money into a savings account, or maybe money market or fixed deposit, somewhere where I get a return somewhere at least equal to the inflation so that the value of the money is saved. It's kept intact. That is what saving is. And then investing. Investing is all about increasing the value of money. So you increase the value of money over and above the inflation. So by the way, any one of you, can you make a guess? What is the current inflation rate? What is the current inflation rate, by the way? On an average, because it keeps updating, being updated every month. But roughly, what is the current inflation rate? Yes, Joseph, it is somewhere around 4 to 5%. Yes, it is between 4 to 5% currently the inflation rate. So if someone doesn't know what inflation is, inflation means that how expensive things are becoming when compared to year earlier. So what I used to buy for 100 rupees a year earlier, how much I need to pay today. So if I have to buy something at 100 today, if I need to pay 104, that 4 rupees is called inflation. So similarly, my value of money is intact if my 100 becomes 104 or 105. And that's the reason if you see your savings account or your fixed deposit, the interest rate is somewhere between 3 to 5.5%. This is what. So your savings account gives 3 to 3.5% unless you are fancy of opening some saving accounts with the new banks like Bandhan Bank or IDFC First Bank, which is giving 6 to 7%. Of course, conditions apply. And other than the most likely, your savings account would be yielding somewhere between 3 to 3.5%, and fixed deposits give you currently at somewhere around 4 to 5.5%. So somewhere near to your inflation. Anything below what I am speaking about, the savings and fixed deposit, this is where this gives you an return which is somewhere higher than inflation. So long-term debt. So long-term debt doesn't mean your fixed deposit. Long-term debt means buying some debentures, corporate bonds, or your debt mutual funds. So there are mutual funds about both debt and equity. So debt mutual funds, investing into gold. So we Indians are very fancy about gold, and have a myth that gold gives you a very high return, but actually on an average, if you take for the last 10 years, gold has given a return of about 7.8%. So this is a return. Only the last 2 years, gold has given very high returns. But if you take on an average for the last 10 years, if someone has bought 10 years back, the return he has got year on year is somewhere around 8%. A real estate gives 10 to 15% unless you are someone who is a real estate expert and you know which projects are coming where, inside information. Real estate give between 10 to 15%. Mutual funds also, equity mutual funds tend to give between 10 to 15%. And it is direct equities. When you directly invest into the stock market, only then you are unleashing a potential of unlimited wealth. If you take up the top 10 wealthy people in the list in the world, each one has become wealthier because of the equity holding they have either in their own company or in someone else's company. Whether you speak about Warren Buffett, whether you speak about Elon Musk, everyone, that net worth is because of their equity holding. So equities is the potential where you can have a direct unleashing potential of more than 15%. There are people who can earn even 20-25% year on year. So let me understand, what does investing into the stock market means to you? So the moment I speak about stock market, what is the first thing that comes to your mind? Whatever, one word, one line, one sentence, whatever that comes to your mind first, kindly type it in the chat window. What does investing into the stock market means to you? Risk, risky. Okay, Shilpa. Anything else? I'm looking for some more ideas. Smart money. Okay. Easy money. Yeah. I was actually looking for this. Easy money. Manish, returns. Create wealth. I really love this. Create wealth, Kishore. High risk, high return. Putting money into economy. Okay. So let's explore all these beliefs. Okay. I have all these beliefs listed out here. Let's explore all these beliefs, how they actually are, whether it's a myth, whether it's a perception, or whether it's a reality. Ashwin, I really love this. Second source of income. Really appreciate you for that. Okay. First thing, belief. Investing in stock market is too risky, isn't it? The first thing, in fact, if you saw the first two answers were instant, that is risk. Stock market बोले तो बहुत risky business है भाई. Okay. Do you know what actually risk is? What actually risk is? How many of you drive car? How many of you drive car? Or how many of you actually swim? So if I have to drive a car, when the first time when I didn't know how to drive a car, would it be okay, I want to drive a car, so just pick up my dad's car key, चाबी घुमाया and निकल लिया? Is it that the best suited thing, or would I go to a driving school, learn how to drive and then drive a car? What would I do actually? Or if I have to go for swimming, will I just go and jump into a swimming pool, or would I properly learn how to swim with the safety guards and everything, and once I learn, then I will swim freely? What would I do? What is the best thing to do for me? Tell me. Whether it's a driving, whether it's a swimming, whether it's even cycling, whatever it is. Should I learn first, or should I just go and jump and start doing it? When I was learning a car, I still remember when the first time I caught the wheel, my hands were shaking. My hands were shaking. And I was so attentive. मतलब घबरा रहा था कि कहीं जाके किसको ठोक ना दो. Okay. And today, I can happily drive my car. At the same time, if someone calls me, I can still answer my call. Okay. Though it's illegal, but I can do that. That is the kind of command I have on the car. So, do you mean to say driving isn't risky? Driving isn't risky? Yes, it is risky. But what is the probability that when I have not learned driving, when I'm just started my driving, what is the probability of me going and meeting with an accident? And now when I've been driving for the last almost 15 years and I've become an expert in driving, what is the probability of now I'm meeting with an accident? What is the probability? When I have not learned, the probability is high, and when I have learned, the probability is high. When it is. I'm looking for the answers. Guys, you need to be quick onto your chat window, like you're quick onto your WhatsApp. The probability of meeting with an accident is when I have not learned. So actually, Warren Buffett, he says that, Warren Buffett, the father of investing, he says that risk is not into the stock market. Risk is actually not knowing about stock market. The moment you learn something, it doesn't appear to be as risky as it was. If investing in stock market would have been risky, then these are the returns of BSE Census stocks in the last 10 years. Okay. So the last 10 years, if you see here, there is not even a single company which has given a negative return. There is not even a single company which has given a negative return. The last 15 years, it is the same. But in the 5 years, if I see, yes, there are few companies which have given me a negative return. Same thing, if you see, here are other companies also, 15, 20, not major. But 5 years, again, if you see, so many companies that have given me a very high negative return. This is what it is. The stock market, the first fact that everyone needs to learn is, stock market is a long-term game and it's not a short-term game. In a long term, it yields money. In a short term, it is highly volatile. And people confuse the volatility with risk. So it is not about stock market is risky. It's only about people in the stock market, they invest without learning. And 98% of the people lose money because the moment they think of investing into the stock market, they just go happily open a demat account and start investing based on some Tom, Dick and Harry advising them. Isn't it? That is what most of us do. Isn't it? Or do we, the moment I plan that I need to invest into the stock market, do I look for go and properly learning how to invest in the stock market? Or do we just open a demat account and start investing in the stock market? In fact, post lockdown, there is a huge like splash of people opening an account. don't know anything about stock market, and just because everyone is investing in the stock market, they have started investing in the stock market. And why people don't learn? Because there is another popular belief. They see, I need to have a very high financial IQ. And if that had been true, all the financial experts would have been wealthy people. The fact is, it is not the high financial IQ. It is actually their hard work to learn. Second, discipline. And third, understanding the psychology behind the stock market. This is what actually makes an impact. People with high financial IQ, most of the times end up losing money because of their high financial IQ. They have high overconfidence as well. This leads to another myth saying that only experts can money in the stock market. How many of you agree that only experts, I need to be an expert to make money in the stock market? And frankly, guys, if experts could have made money into the stock market, then each and every person who's into the research desks of so many broking house would have been a crorepati by now. He would have been a millionaire and billionaire. They must not be working. They must not be working for, let's say, less than. Yeah, Surinder, Newton lost money into the stock market because Newton didn't learn how to invest into the stock market. He knew something else. Fourth, people feel mutual funds are the best path to prosperity. Okay. Many people stay averse of stock market because they feel mutual funds are the best way. Because somewhere there's a campaign, no, mutual fund sahi hai. Okay, yes, mutual fund sahi hai. But mutual fund sahi kiske liye hai? They are first the people who don't know how to invest into the stock market. If you are ignorant about the stock market and you don't intend to learn, or you don't have the willingness to spend some time to learn about the stock market, yes, then investing into the stock market through mutual funds is a better way, because something is better than nothing. Rather than investing everything into your fixed deposits, it is better to take equity exposure at least through mutual funds. But does mutual fund really give good returns? No, because at the end of the day, you are dependent on the fund manager, and the fund managers are not paid for the returns. The fund managers are paid for the assets they are managing. So their only work is show performance in such a way that people keep on investing money. And do you know one fact about mutual funds? People always invest money only in that mutual fund which has given very good return in the last 1 year. They don't look at mutual funds which have been consistently giving return for the last 10 years, and last year may be bad. So, okay, let me see the consistency. Most of the people invest money into the mutual funds which have given very good returns in the last 1 year. 98% of the people do into the stock market. Benjamin Graham, how many of you have heard about him? Benjamin Graham. Benjamin Graham, how many of you have heard about it? Good, Manish, at least I could find someone. Yeah, because I rarely find someone identifying Mr. Benjamin Graham, and I'm really happy. Yes, he's a professor, and he's not just a professor. His right intro would be, he's the guru of Warren Buffett. He's the one who has taught Warren Buffett investing. He's the person from whom Warren Buffett got inspired and took up investing as a permanent long-term career. So Benjamin Graham's core principle of investing, what is his core principle of investing is trying to understand what is investment and what is speculation. He says the first thing that a person needs to do is understand what is investment and what is speculation. So what is this? This is an excerpt from the book called The Intelligent Investor. He has written into The Intelligent Investor, which is one of the best books into stock market investing. Okay. So what he says is an investment operation is one which, upon thorough analysis, promises safety of principal and an adequate return. Okay. Any operations not meeting these requirements are speculation. So what he says, what are the core ingredients of investment? That is, any transaction to be called as an investment. The first thing is, it should be after a thorough analysis. How many of us actually do thorough analysis? There are only 2% of the people who do analysis. I'm not speaking about thorough analysis. 2% of the people do analysis and then invest into the stock market. out of the 2% people, only 1% do thorough analysis. And rest 98%, they don't analyze, they just invest, they put money into the stock market for reasons best known to them. Second is safety of the principal. So while putting your money, what you should have is the safety of the principal, not the principal saying that high risk is equal to high return. And third is adequate return. What is the kind of return that you can anticipate? So what is the adequate return? Adequate word means something which is I'm happy with, I'm satisfied with. So whatever return you are satisfied with, be happy with that. Don't go for 20-25% return if you are fine with 12 to 15% return. So how to and how not to invest into the stock market? The first thing is how not to invest into the stock market. Never invest into the stock market based on news or media reports. Never invest based on the market tips. Because tips कौन लेता है? Tell me who takes tips? Whom do you give tips? You give tips regularly, no? Of course, not after the lockdown. I'm speaking about the before the lockdown. But आज भी देते होंगे यार. Swiggy में now Swiggy has come with a new option of tips. So tips whom we do? Normally we give the waiter into the hotel. We give him tips. Okay. So are we such sheep that we take tips? No. So never invest in the stock market based on the market tips. Just based on the research report. Because all these brokerage houses, they invest lot of money to generate research reports because their intention is to make you invest in somewhere or the other. At the end of the day, their money comes only when you keep regularly buying and selling into the market. So never just buy based on the research report. Yes. If you like a company based on the research report, that should be a company where you can shortlist and start analyzing it further. Never invest based on someone friend's advice or any other expert's advice saying that boss इसमें invest कर 2 महीने में double हो जाता है. Always remember, resources to invest are limited. या किसी के पास कुबेर का खजाना है? Does anyone have that unlimited source of wealth? कुबेर का खजाना बोले तो unlimited source of wealth. It's an Hindi term. So does any one of you have an unlimited source of wealth, or you have a very limited source of wealth? Because what I feel is resources to invest are limited, but the options to invest into the stock market are so many. There are so many options to invest into the stock market. So you should always invest after a thorough analysis. So how can you start your investment journey? So by the way, before I take up this section to start your investment journey, how many of you are new to the stock market? And how many of you are experienced? And if you are experienced, since when you have been investing into the stock market? Let me understand this first. New. Praveen from 3 years, Jyoti new, Anirudh new, Ma new. Okay, Divya never tried. Experience. Shivam 3 to 4 years. Okay. So I see most of you are very new to the stock market. Okay. And I'm happy that you have joined this session to know how to invest in the stock market. Really appreciate your efforts. So when you are actually new to the stock market, or even though you are an experienced, first focus on how to identify your circle of competence. How can you identify your circle of competence? Always invest within your circle of competence. Now, what circle of competence means? Circle of competence means when I divide all the companies into the stock market, basically all these companies into stock market are into business. They are doing some other business. And when you are investing into those companies, what you are doing? You are basically investing into those companies' business. If a friend of yours says, hey, boss, Sashidhar or Nidhi, let's start a business. Can you invest 10 lakhs? What will you first do? Will you first try to understand what and which business he wants you to invest? And agar wo samajh mein aaya, if you really understand that business, only then you will invest. Or just because your friend has said, you trust your friend and you will go and blindly invest the 10 lakhs. What you will do? Tell me. Will you first understand that business, assess that business, and then invest? Or will you just, because your friend is saying, you will go and blindly invest? Isn't you? You will understand. So when it is your friend and still you don't blindly invest, how can you go and blindly invest into companies which you don't even know, which is run by promoters whom you don't even know? So always invest. So the black circle in the middle, is a circle where which companies fall into the circle, only those companies you should start investing. So I really understand the business and industry. So companies which in this business and industry you understand. Like most of you must be from IT companies, isn't it? Most of you from the IT companies. So when you're from IT companies, when you start analyzing an IT company, will it not be easy for you to understand an IT company's business, or will it easy for you to understand to go and understand Sarah sanitary ware, or maybe an pharma company business? Which one would be more easy to understand for you? Tell me. Isn't it the business which you already know, or some at least some understanding you have? So always invest into the companies which falls within your circle of competence. And then there would be certain companies which you may not actually properly understand, but still you have got a pretty good understanding. So these kind of companies make certain efforts and you can easily understand. But don't invest into the companies where you just have some high level of understanding, or you have no understanding of the business whatsoever. No matter a great company can be, no matter how great that company, like Reliance, it's a great company, but can you understand the business model of Reliance? No. If you don't understand the Reliance business model of Reliance, I would suggest stay away from Reliance. Invest into a company which you actually understand. And that is what Mr. Warren Buffett also says. What he says that everybody has got a different circle of competence. The important thing is not how big your circle is. The important thing is staying inside the circle. Even Warren Buffett also doesn't invest into companies which he doesn't understand. When he don't invest, he also first see whether the business is कुछ दिमाग में पल्ले पड़ रहा नहीं पड़ रहा, and then he will make some effort to understand it further, and if it doesn't make sense to him, he will just scrap it. So then comes, once you identify your circle of competence, what you need to do is prepare a stock watch list. Prepare a list of companies which you feel you can understand and start analyzing those companies. Now, how can you prepare a stock watch list? Basically, people who are new, you may feel, how can I prepare a stock watch list? Start with a general observation. If you move your head left and right now, you will see so many listed companies come and sitting into your home. There's so many listed companies who are seated in your home. Your cars, Maruti, Tata, Mahindra. In the car, the battery, Amar Raja, Exide. The fan at home, Havells, Crompton, Bajaj Electronics. Your ACs, okay. Your plywood, Century Plywood, Green Ply. Your newspaper, there are so many. So there are so many companies which you are already an existing buyer, or you are an existing consumer. So as a consumer, what you do, now when you have to buy an AC, don't you do a thorough analysis of various AC models into this thing? Or when you buy anything for your home, don't you do a thorough analysis about it? Before you wanted to buy, you didn't know anything about it. But the moment you intend to buy, don't you do a thorough analysis of it, read, understand a lot about it, and then do a buying? So when you're buying a AC, when you're buying a car, when you do so much analysis, when you're investing your hard-earned money, isn't it? Isn't the money you put into the stock market a hard-earned money? Or kaise chori karke leke aao? I presume it's a hard-earned money. So when we are investing our hard-earned money, can't we work a bit hard? Can't we do some analysis? So you can identify the companies and start understanding, कि boss, ये company पैसे बनाती कैसे है? How they earn money, from where the revenue comes, how consistently they have been earning money. So you can use general observation. You can do through your general observation, you can identify a lot of companies. If you can't do, there is another way. Pick up BSE 200 index. From BSE 200 index, you can actually take out a list. In fact, if you want, I can share you the list of BSE 200 index, or your Nifty 500 companies, the 500 top companies into the WhatsApp group which Samina was telling. So if you are part of that WhatsApp group, if you become a part of that WhatsApp group, I will share that list into the thing. So you can start reviewing the companies and take out a list. So pick up a list of companies which you can easily understand. And once you pick up a list, start going through the company's annual report. Now, where to find this company annual report? I will just show you. I will show you how to find a company's annual report, understand the business, and once you understand the business, then once you read the annual report, understand the business, then shortlist the company and do a fundamental analysis. So how to do a fundamental analysis? That you will have to learn. There are a lot of courses available. Even I'm basically a trainer in fundamental. We do run a course, learn to earn. But anyway, this session is not meant for that. So you can do fundamental analysis. So what are the stocks to avoid? So what are the stocks to avoid? The stocks to avoid are businesses that I don't understand. Now, so there is a slight deviation. I thought, okay, let me look at it. Now you must be wondering, boss Rajesh, इतना ये बोलगा कि ये information निकालो, वो information निकालो, but आखिर ये information निकाले कहाँ से? Do you have this question? Is there any place where I can just get into and try to take out some information about this company? Are you really interested? Would you be interested? If you are really interested, company website, NSE website, yes, they are all there. But there is one more area also. So I will just take you to that. I will just take you to that. Give me a time. In fact, I didn't plan that, but somehow I felt that, okay, it would be appropriate for me to actually show you this. First, money control is a site which I basically avoid. It's too much of noise in money control, not much work. Screener.in. How many of you have heard about this? Screener.in. How many actually heard about it? Now, this is a website which I basically use to do my own initial screening. Now, Screener.in, once you have a watch list, there are a lot of updates that would be coming. So tell me one company. Whoever comes quick, tell me one company which you would like to know. One company, any one company. ITC, Jindal Steel, Reliance, CAMS. First, CAMS is yet to get listed. I cannot find data of this. HDFC, SBI, Apple India, HDFC. Okay, HDFC 2 votes. Vodafone Idea, Philip Carbon. Let me pick up Vodafone Idea. Okay, a company which आजकल बहुत लोग the Vodafone Idea. The moment I type Vodafone Idea, okay, there is a lot of information which this company will give. Okay, now if you see here, there's a lot of information available. What is the historical PE? There are a lot of complex terms about this. You will have to learn these terms. I cannot explain you all those terms here, but entire fundamental information about the company, that how much return the company has been giving. So if you see the sales growth of this company for the last 5 years has been 7.33%, and profit growth is not mentioned because it has not grown into profits. If you see what is the average earning into the last 10 years, on an average, the company has not earned, it has lost money into the last 10 years. That is 5,371 crores year on year. On an average, it has lost money. Okay, this is what. So would you? Okay, so here there would be pros and cons about this company, and then at one place you can get the results of this entire company. You can get a 12 years result at the same place. So if you see, just don't see anything else. If you don't understand anything, at least sales or profit to samajh mein aata. If you see what is the sales from 10,000 crores, it has grown up to 44,000 crores. Matlab 4 times it has grown in terms of sales. And you see in terms of profit, how much it has grown. From 882 crores profit, it has gone into a loss of 73,000 crores. And if you see in the last 5 years, it has not made any profit. Similarly, the balance sheet is available. People understand the balance sheet, cash flow. In cash flow, you can see one thing, one activity. Okay, so cash flow you can look at, and then here it is. Here you can get actually the annual report of this company. If you just click, the annual report of the company will open. Any company you want to see, go try to understand how this company has been performing, what is the business the company has grown. Now you tell me, good idea, no matter how cheap it is maybe available today, it is consistently making losses for the last 5 years, and currently it is making a loss of about 70 to 75,000 crores. Will you still prefer to invest into Vodafone Idea after knowing this? No. But without seeing this, many of the people have already invested into Vodafone Idea, isn't it? They have invested into Idea because बॉस ₹5 में बहुत सस्ते में मिल रहा. This is how actually people invest, and it is not so. It is not difficult to start knowing about the companies or start analyzing the companies. So stocks that you should actually avoid are businesses that you don't understand, companies which have high debt, जिसके सर पे बहुत ज्यादा कर्जा है. Like currently, there are many of your colleagues who must be losing their salary, jobs. So people who have lost a job are people, saying, so out of the people who lost their job, persons with high EMIs, will they able to sustain? Persons who don't have any EMI at all, they have some good savings, will they be able to sustain? Who will be able to sustain? Tell me. People with high EMIs or people without EMIs? Isn't it people with no EMIs and good savings? Isn't it? They would be actually able to sustain. So similarly, even companies also, when things go wrong, like current pandemic scenario, companies which have high debt, they are going to collapse. It's not easy. High litigation companies, high growth but low profitability. You see, what idea? 10,000 से 40,000 crore का business हो गया, but on 40,000 crores revenue, it has made a loss of 70,000 crores. What's the point? At the end of the day, what I am investing is to get profit, isn't it? Companies with negative cash flow, constant variation in promoter holdings. Okay, business model is too tricky to understand. You're not able to understand the business model. Companies which have gone from recent acquisition, please don't invest into some new media news that it is acquired. Like Hathway has been acquired by Reliance. Okay, Hathway has been acquired by Reliance, but has Hathway suddenly turned around just because it has been acquired by Reliance? No, but people are going and investing like mad. Corporate governance issues, companies which are not known for its corporate governance. Okay. So in coming to that, once you avoid this kind of companies, let's understand what the current scenario is. Promoter holding is people who are running. Promoters are the people who are actually running the business of the company. So how much holding they are, because once it's a listed company, there are promoters. So there are three kind of major players into a company who own that company. First is promoter, that is people who are running the business of the company, they are the promoters. Second is institutional investors. That is your foreign investors, your domestic institutional investors like mutual funds and all. They are domestic institutional investors. And third is public, like you and me, the general public. So there are three categories of people who own a company. So promoters are the people. Manish, it's not owners, because if you are investing into a company, you are also an owner of the company. So it is not owners, people who have started this company and who are managing this company. So jo chala rahe, that is what. So if you are a shareholder, you are also an owner of that company. So understanding what is the impact of COVID now. So COVID, global economies have come to completely halt. Okay. In fact, it has come to halt where economies have started degrowing, isn't it? Now economies have started degrowing, your GDP is reducing, payment cycle is actually impacted in trade. If you know someone who is into trade community, they will tell you कि payments बहुत मुश्किल से आ रहे हैं. In fact, the old debts people are not able to collect. So if people are not able to collect money, what will happen? How long they can actually run the business without a proper payment cycle? Even banks are also not getting paid because moratorium. Many people moratorium के नाम पे people are not paying back money to the banks, the EMIs. Okay, so everywhere the payment cycle is halt. There's an uncertainty of how long the situation is going to continue. Job losses have already started. Okay, pay cuts are already on the card. So when pay cuts are there, people are not going to invest much. Okay, people are actually avoiding not so urgent and unnecessary expenditure. So if expenditure is getting reduced, obviously there will be very less buyers into the market, and when there are less buyers into the market, companies will not be able to generate the revenues which they were earning earlier. Deferred EMIs, No one has an idea what kind of impact it is going to have on banks. Okay. Even 30th September, it still differs. So unless the payment cycle starts, no one has an idea what kind of impact it's going to have on banks. And even if a single bank goes down, it is going to have a huge impact on the economy. International trade would take a very longer time to get on track. And especially economies that are hit by COVID, they are going to get pissed off. It is like economies which are dependent on crude, like your uh, like Dubai, UAE, Emirates. These are all countries which are highly dependent on crude oil and travel and tourism. Like Thailand, Malaysia, they're highly dependent on travel and tourism. These countries, how long they can sustain? So what's have changed for long term? The social distancing norms are going to stay. Spending habits have changed. People are preferring less of public transport. So this actually, if you see, this is reflected into high increase number of sales into two-wheeler and four-wheeler. Okay. Extra focus on healthcare. So that's the reason pharma stocks have been started increasing, because people are anticipating that pharma spend is going to increase and people, pharma companies are going to do better. Okay. There's a hesitation in take long-term commitment. No one is taking a long-term commitment. Or you tell me, if someone asks you take a long-term loan now, it's committed EMI, will you be confidently able to take it now? No. So no company, no one is able to take a long-term commitment. There's a lot of realization that people need to save for the rainy days, isn't it? Before a year, savings was not a big ticket on the, but now people, everyone knows what is the importance of saving, what is the importance of having a proper, efficient financial planning. Digital mode of communication and transaction is going to increase. So that's the reason if you see the kind of response to the Root Mobile IPO and Happiest Minds IPO and the kind of listing they have got, because that is what is being anticipated into the market. Need for localization of essential commodities, and China is going to still be a culprit. So many companies which are going to be a substitute for China, okay, are anticipated to do better. So how you should devise a strategy to invest into the current market? Invest into those companies which you feel can quickly recover from the impact of the COVID-19. Like your FMCG companies, your pharma companies, IT companies. These are the companies which can quickly recover. And if you see, already they have been gone into overvalued zone. So what you should do? Wait for correction to happen, and when correction happens, try to invest into these companies. Invest into companies which have a strong balance sheet. Don't invest into company which has a weak balance sheet, which has high debt. Invest into a company which has a strong balance sheet, companies which have an efficient working capital cycle, which have positive cash flows, where you can predict the future earnings. Like you tell me, can you predict the earnings of Vodafone Idea or Tata Motors? Tata Motors has been hit badly. Its Land Rover and Jaguar has not been doing well because it is highly dependent on the sales in China. So, can you predict the future earnings of Vodafone Idea or Tata Motors? No, it cannot be. So always invest into the companies where you can reasonably predict its future earnings, predictability of future growth. So invest into a company, blind rule. Only invest into that companies which you believe, okay, can really grow well in the next 5 to 10 years, not in next 1 year. Don't invest into a company which can do well in next 1 year. Look at companies which can really do well into next 5 to 10 years. Good operating margins, high capacity to suffer. Okay. So how should you build your portfolio? Start investing in defensive stocks. Prefer a proper mix of large and mid cap stocks. Slowly build up your positions. Don't invest everything at a time. Okay. So watch the next quarter very carefully, because next quarters are very crucial for the economy. So next 2 quarters, you should be very cautious in investing. None of these are very confidential in nature. All these things are available into annual report. So I would request one humble request after this session today, no, whichever company you would like, no, downloads an annual report. Download that company's annual report and go through that company's annual report completely. Whether you understand that or not, don't worry about it. Go through the annual report. That itself will open your eyes that what kind of information is available into the company's annual report. Then your myth will be broken that most of this information are very confidential and don't have. In fact, listed companies, Lot of information is available in public domain. And 60% go for a long-term position and only 40%. So if you're a trader, okay, please don't trade a lot. So go for 60% long-term position and build it up slowly. Build your position over next 6 months. Don't invest at one go. Only invest that money which you will not need in the next 5 years. So just because you have some money and everyone is investing into stock market and your friend says, Abhi, stock market, right time to invest, it will develop in 1 year. So next 1 or 2 years, you may be needing money you don't require now. So don't invest that money. So invest money only which you don't require in the next 5 years, and don't invest more than 10% of your entire portfolio into a single stock. Okay. And one more thing, if you are investing into stock market, be prepared to see your portfolio getting eroded by 30 to 50%. If you can actually handle that, it would have invested 1 lakh, and after a month or two, this 1 lakh becomes 50,000 or 60,000, and you can handle that, only then you invest. If you cannot handle that, you stay away. So what is the final roadmap? Create a stock watch list. So create a stock watch list of about 20, maximum 20 companies. Don't do more than that. Create a stock watch list of these companies. Okay. Download that company's annual report and try to read and understand that company's business and what are the future prospects of that company. Because what you're investing is not into the present of the company, you are investing into the future of a company. So understanding its future prospect is very important. And always invest into installment in tranches. Don't invest at one go. Invest into learning, boss. Please learn. In fact, that's the reason, in fact, our own stock market curriculum, we have named it as a learn to earn. So please learn to earn how to invest, how to earn from the stock market. Monitor the progress of the companies that you are investing regularly and keep a personal investment diary. So start preparing a diary and start noting down whichever companies you want to invest, start noting it down. Be a decision maker, don't be a follower. So someone was asking about fundamental and technical analysis. So basically what fundamental and technical analysis is, so fundamental analysis is basically for investors. So if you are going to invest for a very long term, the fundamental analysis is an approach where you try to understand what is the current phase of economies, and then you try to understand the industry. So that's why I told you, identify a circle of competence where you can pick up the industry which you can understand, and then from that you pick up a company and try to do the analysis of the company. Okay. How to do the analysis of the company? For that you will have to read a fundamental analysis. You have to learn fundamental. And similarly, technical analysis. So technical analysis is basically for traders. So people who want to invest money for short term. Aaj paisa dala, morning buy, evening sell, or buy today, sell after a week or so. It is primarily for them. So technical analysis is meant for them. And technical analysis is basically a study of price and volume. So how the price movement and what is the volume movement that is happening into the stock market, and try to understand what kind of actions people behind the stock market are they trying to take. And based on that, you do an analysis and an assessment, and then you take a position. So analysis is common in both, whether you do fundamental analysis or technical analysis. Analysis is common in want to be a trader, then technical analysis. So these are the few books which I am suggesting to read. The Intelligent Investor, written by Benjamin Graham. This is one of the best book till date written on value investing. One Up on Wall Street, Common Stocks and Uncommon Profits. So these are the 3 books. If you want, please take a snapshot of this. And then the Warren Buffett Way and Essence of Warren Buffett. So please read this book. These are basically photos of our sessions which we take now. In fact, this is actually a technical analysis session, and this is a fundamental analysis session which I am leading. This is a session we took for students of St. Anne's MBA College. So we take a lot of. Yeah, I can share the PPT file into the WhatsApp group. So SP, if you are not part of the WhatsApp group, you need to actually be part of it. Amina, can you please post the link of the WhatsApp group into the chat window? Can you please?
Yes, I will share it, sir.
Yeah. So I request you all to kindly join the Financial Hi-Fi Club. So this is a club which has been formed on WhatsApp. I'm personally available there on that club to answer your queries. Tranches means installment. That means if I want to invest 1 lakh, don't invest 1 lakh at a time. Invest 10,000 or 20,000 a month and spread it across at least next 5 to 6 months. So don't invest entire 1 lakh at one go. Even if you want to invest into one company, buy few the company shares now. Next month again you see, even if it go ups or down, again you buy some more thing. So these are my contact details. So you can note down the contact details. If you can, but I will share you the link even of that WhatsApp group if you're not able to click the link. Okay. Yeah. So now I'm just letting any one of you to unmute yourself. So now you can unmute yourself. So if anyone has any questions, any queries, please. I'm actually posting my number, my WhatsApp number into the chat window. So I posted my number. So if you need, you can please note it down. Any questions? Welcome now. Rashmi, once you join the group, please message me. Only then I will post this PPT into that group. Web of fundamental analysis seems more logical, while technical analysis seems to follow the trend, which might be different in different situations. Your thoughts? Okay. The fundamental analysis, technical analysis, both are logical. Okay. In fact, it is a logic which applies into both. So fundamental analysis is basically a method where you try to understand a company's business model and see how the company's business model is, how well the company can grow in future, and whether the valuation of the company, that is the stock price of the company, is worth the price or not. Like when you go for a buying, when you go for any buying into the market, what you do, we basically see whether it's a phone, whether it's a laptop, whether it is worth that price. Okay, that is what, and whether the specification, everything are fine. So that is what actually when you do the same thing to a company, it is a fundamental analysis. Now technical analysis, what you see, the same company you pick up and see in the last 5 to 10 years or last 1 to 5 days, how people have been moving, what is the price action movement, and how people have been, that at what level people are buying, what level people are selling, how people are behaving into the stock market when compared to that company. So technical analysis, yes, as you rightly said, it is more, it shows the trend, what is the current trend. So it is only a short term, it cannot guide you for a very long term. So that is why I said people who want to be trader, no, for them technical analysis is good. But what I always feel is a person needs to learn, if you really want to be a serious player into the market, stock market, whether you're an investor or a trader, you should learn both the fundamental analysis and technical analysis both. Please, I didn't got the question. What is the minimum time frame for technical analysis? What is it? What the question means? If you don't mind, can you unmute yourself and speak up?
Yeah, hi Rajesh. Can
Yeah,
you hear me?
Yeah, I can hear you.
So, like, to be successful in technical analysis, what is the minimum time frame? Like daily analysis or weekly analysis? On what we need to concentrate?
See, basically, have you already learned doing the technical analysis? First thing.
Yes, I did for forex market.
Okay. So basically, in terms of technical analysis, what you need to do is you always need to first look at monthly charts.
Okay.
You need to first look at the monthly chart, see what is the long-term trend. Okay.
Okay.
Then from monthly, then you come to weekly charts.
Okay.
See what is the weekly trend, and only then you should come to the daily chart, and then see what is the short-term trend. So it starts from monthly, then to weekly, and then to daily. And consistently, you should be fine with your analysis. So what you see in monthly chart, if it is a bullish trend, and weekly chart is showing a bullish trend, and daily chart is showing a bearish trend, that means you should stay away and try to observe that a lot. But if your weekly and monthly daily chart are both showing the bullish trend, then it's a good time to invest into that.
Okay.
Okay, yeah. Prerequisite for investing in stock market, as I told you, prerequisite is please learn investing, or even if you start investing with small thing, but slowly start learning. So you can learn on your own. A lot of free things available on internet. Of course, don't just get to the lot of YouTube channels are available. Don't go to that. But yes, there are a lot of free things available on the net. There are a lot of paid courses available on the net. Even we have a paid course called Learn to Earn. So there are a lot of options available for you to learn into the stock market. So invest some time into learning. So invest some time into learning. It will, and within next 6 months, no, if you invest your time in next 6 months, you will get handy with lot of things about stock market, and then you can plan your investments. How the tax need to pay while investing into the stock market? So then the tax is in stock market. When you invest into stock market, it's a capital gain tax. The capital gain tax that is applicable. So when you are investing for a long term, it is 10%, and when it is short term, it is 20%. It's a capital gain tax that is applicable. The long term means if you are bought a stock today and if you are sold after a year, that is a long term. If you are holding for more than 365 days, then it is 10%. Any other queries? No, I said after 1 year it is 10%. The long term means after, it used to be tax free earlier, but now after 1 year it is 10%. The long term capital gain tax is 10%, short term is 20%. Yeah, Vaibhav, that is exactly what I showed. There is so much info available on internet, so please don't get it. Start with, so any company which you want to first get some little information. I told you, one site I said about is screener.in. Please go to screener.in. There is another site called Tijori Finance. Tijori Finance is a very good website. If you want to know about the company, please go to this website. So have your own independent view. Don't go to sites like Money Control, where you will be just dumped with lot of opinions, a lot of trader opinions, and you will just get influenced by their opinions. So don't go there. The best sites would be screener.in. Screener.in, and you go for Tijori Finance. The books I suggested, as I told you, no, the best book is Intelligent Investor. Learn the Intelligent Investor. Uh, in fact, there is one more book on fundamental analysis, which you, if someone is interested to learn fundamental analysis, there is a book on fundamental. I just forgot it, the writer name. The book name is fundamental analysis, but I've missed out the writer name. In fact, there is a book of Zerodha also. I can actually post it into the group. So someone who want to learn fundamental analysis, I can post that book into the group. I've got a PDF version of it. I can share that. Varsity app I cannot comment because I've not seen that app. What I understand, it is a too basic app, so that is the reason I didn't got into the Varsity app. But if you're really so interested, you're so interested into the stock market, no, I would suggest you to do one proper course. Pick up any trainer whom you like. There are so many people, and currently, thanks to COVID, all the sessions are now available online. Okay, there are a lot of recorded programs. There are live programs. So pick up any trader, any person you like, any course that you like. Do one proper course. Do one proper course on fundamental analysis. Do one proper course on technical analysis, and then you start doing. If you are really serious about investing into stock market. Else, please don't burn your money. Stay away from it. Invest into mutual funds, but don't unnecessarily put your money. I know a friend, one of my clients. Other day, his wife called me up. Both they are our clients, so we do. I do financial and planning for them, and keep regularly advising them. So they both were actually making me a judge. They said, Rajesh, we want you to judge, and they were explaining that who lost how much. The husband lost 20 lakhs into directly investing into the stock market, and the wife lost 8 lakhs by investing into the mutual funds. And they wanted me to judge कि boss इसका process सही है. So this is the scenario. Okay. So please, if you don't know where and how to invest, please don't lose your money by investing into something wrong. Even like mutual funds. Nowadays, people are crazy about direct funds. There's a lot of like apps where people just go and based on the recommendation. Please try to understand. In fact, few days back we did do. I did a program on. I did a program on mutual funds also. In fact, the recording is available. You can actually take it from. It should be available with your portal, the portal which you have an access to from Ethica Work Life. The recording could be available. I think Samina, the recordings are available on Ethica Work Life portal. No?
Yes, they are available in YouTube as well, sir.
Okay. Yeah.
Channel name is Ethica Work Life Virtual Events.
Yeah. So you can access there. Yeah, Samina, I think we are good to go. There are no other questions.
Yes, sir. If there are no any questions, we can end the session.
Yeah. So please post again that WhatsApp link once again. I request you to please post the WhatsApp link into the chat window.
Sure. And after this session, I will be sending you a WhatsApp link as well and feedback link also. So please give us the feedback so that we can do more and more sessions. Please join the WhatsApp group so that if you have any doubts, you can reach out to Rajesh sir there. You can clear all your doubts.
Okay. Shivam, the last question. Okay, just a minute before ending. Shivam, the last question. What should we prefer, ELSS or mutual fund? Okay. So Shivam, first thing is ELSS is a type of mutual fund scheme. Okay. ELSS are tax saving mutual fund schemes. If your intention is to save tax, that is for your ATC, then ELSS scheme. And if it is not for ATC, not for saving tax, but it is for your long-term wealth creation, then you should go for some good large cap or multi cap mutual fund scheme. Okay. Okay, thank you. Thank you very much.